Hello, everyone, and welcome to your Daily Five for June 13th, 2023. I'm Leslie Jouflas of Trading Live Online, and I really enjoy doing these segments a couple of times a month. Well, I'm seeing so many things that I really had a little bit of a difficult time narrowing it down to about five charts. I'm going to cheat and show one more chart. But we're going to take a look at some of these bullish upside breakouts. If you have followed my daily five segments, and if you happen to see my appearance with David Keller on the final bar, June 1st, I discussed at that time we were still trying to get through that 4,200 level. I think that day it just really got above and closed above it for the first time. But the 4,300 level was my first target, and then 4,500, just a little bit above it. So we're going to take a look at the S&P at that, and we'll take a look at the Dow Jones Industrial. We're also going to look at the IWM ETF today for the Russell 2000. And then we're going to switch gears a little bit and look at a couple of individual symbols, Ford and Intel. So let's get to the charts. Before we do, uh, let me just point this out to you. I get a lot of emails from you guys watching, and thank you for that. I always enjoy answering some emails and wanting to learn more about the type of analysis I do. So I have this all course bundle, and you'll see it on the homepage of my website, which is right here. If you have questions, here's my email. But what I'm doing is just bundling all of my video courses together. And so you can read this and go through if you have questions. Feel free to send me an email, but use this coupon code here at checkout for the $200 discount. Hey, we're going to start with this symbol F, which is for Ford Motor Company. And this is a really interesting chart, I think, and this caught my eye earlier today. So this is the monthly chart. So we're taking a look at this all the way back from 2009. You can see this big run up from 2009 up to these highs around 2014. And look at the very long kind of sideways range. Here's the dip from the crash in 2020. So these are the March 2020 lows, and I had actually had this as with some buy patterns back then, and I had a nice run up to this 23. And since then, it came down and then went into this consolidation. So what I'm noticing about this is, first of all, it's getting a breakout to the upside, and of course, this is the monthly chart. So this bar is not going to close until the end of June, but we're going to take a look at another chart for some more detail. But looking at a couple of the indicators that I like to use, the relative strength index is one that I is like my go-to indicator, and I use that to determine bullish and bearish ranges in the RSI index. And here I can see that this has been holding in a very bullish position as the market came down and went into this consolidation period. Here, the ADX is just telling us that this market is contracting. And so we know that expansion phases follow the contracting phases. It doesn't give this is not used as a timing tool. It's just giving us some information. We see the MACD is still a little bit below the zero line, but has been moving up. These are bullish signs here, the on balance volume moving up, and the money flow index also turning to the upside. We can look at this in a little bit more detail on this chart, but one main thing I want to point out is as these types of patterns where you get these long sideways ranges, these are basing types of patterns, and when markets come out of those, they can go into a new trending phase. Not 100% of the time, anything can happen in the markets, but what I'm seeing here, it looks to me as if Ford is getting ready for more upside move. Now, what would change my mind, because I always like to have a level that says, no, that's just not playing out correctly, is going to be coming below this level right here. If I put this pink dashed line in on this monthly chart to point out this price level, so you see how it's coming across these highs around 11 and a half, 11-ish area, and that was also right into the center of where all of this price consolidation happened. And prices tend to, when they're in a coil like this, whether it's a triangle, a sideways range, whatever the coiling pattern is, they tend to eventually gravitate around that center. So you can see here the price just really coiling around that price level, going all the way back several years. And now, again, we don't know how this bar is going to close yet, but if it closes above this price level, then I think we're going to see more of a bullish move. And this is the area right here that you don't want to see it go below. Now we're looking at this symbol IWM, and this is the ETF for the Russell 2000. And what's interesting about this is still in a coiling range where we've seen the Nasdaq have a strong move to the upside. So I thought I'd take a look at this and see what was going on with some of the small cap stocks in the Russell. And here we can see that, it's got to break this resistance level, but I believe if it breaks this level, we're going to see a pretty strong move in these stocks. My suggestion would be to start going through and looking for some of the strongest stocks within the Russell 2000 and be looking for the ones maybe that are already through a resistance point like this. Those, yeah, once this breaks, and those are probably going to be the leaders. Again, the RSI on here in this part of the consolidation, actually all the way back here, had been holding in a bullish range. Now, if this breaks to the upside, we want to see this RSI break above this peak right here. And again, the ADX is telling us that the market is coiling up and it's getting ready for a larger move. The MACD has been moving to the upside. It is in a bullish position, and on balance volume turned up and the money flow also. So spend a little time doing some homework, looking through again Russell stocks. Now, Intel, this is one of the charts that I had with David Keller just 2 weeks ago, June 1st. So we were back right about, that's the second right here. On this bar right here. So this A, B, C, D buy pattern had completed and now made it through the resistance of some of these price highs right around here. And I had pointed out on the June 1st final bar that for a longer term move to the upside, Intel needed to break this trend line. And so now it's right at this trend line. Another thing I had noticed about Intel when I looked at this ranging pattern is that I really didn't see a lot of sell patterns within here. And I was seeing like this big A, B, C, D buy pattern, and then market tests up, a little bit of a false breakout, back down, and there's the center of that range, and that's where the price held support and then has moved to the upside. And it appears to me, we never know what's going to happen, that it's got a pretty good chance of breaking through this trend line. The RSI has been moving up very nicely with this price action. And so again, the place that I really wouldn't want to see it come back to right now is below these lows right here. But if Intel is able to break and hold above this trend line, here is where support broke. Let me kind of move this up, and you can see this very long-term area of support that was broken. And this should be an area of testing up here, also right around this gap level. But it also could be that Intel is ready on a longer term basis to potentially be starting a new trend to the upside, and breaking this trend line may be an indication that that's beginning to occur. Okay, now let's take a look at the S&P 500. And today I'm going to be using a weekly chart. Again, it was a little difficult for me to pick which chart because I'm seeing so many different things going on right now. And so this chart illustrated sort of more condensely what I'm seeing. And what I'm seeing is a lot of patterns that appear to look like inverse head and shoulder patterns. And I've got this one outlined here, but let me back this up a little bit. So here is the highs from where the bear market started down to these lows. And then I've got the Fibonacci retracement levels on, oh, wait a minute. I will in just a second. I'll explain those other ones in just a minute. So here's the Fibonacci retracement. So we've got the 0.382, 50, 618, 786, and so on. So the market has made it through all of these fib retracement levels, and that's a bullish sign. It got right around the 0.50 right here from this high to low. It's the 0.50, and it had some play around there, but it never came down and made a new low. In fact, it held really well above these lows that were made in October. And this trend line here, this would be a left shoulder, this would be the head, and sort of more of a complex right shoulder here and here. So I've drawn the neckline across this way. And if you remember that big consolidation, I showed it in some previous videos, and I did show it on the final bar episode from June 1st. But right around the 4130-ish, 4150-ish level is where the market had this sideways range. And we can see that from these candles. The opens and closes were around that same price level for several weeks. Here was an attempt for the 4200 breakout, didn't quite make it, came back again, and now we've really cleared that 4200. So this allows us to see areas again. Where shouldn't the market go for this to stay bullish? Well, these lows here, below this trend line, probably, notice how the trend line is sloping down. So that's going to, you have to follow that for the price levels. This level, and of course this level would be very, very bearish. But I do think, as I mentioned, that 4,300 had been my first target on June 1st, and now 4,500. And the reason I'm using that number is there's some clustering of the 786 retracement, high to low. That's retracing 78%. And this level here, this swing from high to low, if we take the length of that, we multiply it by Fibonacci extension ratio, which is quite common in the S&P 500 of the 1.27, and we add it to this low, that's projecting that Fibonacci extension ratio. So these two are clustering together. And then we can also just use some classical technical analysis and see over here where the market started down. So resistance there. See these lows right here, same area, these highs, same area. So I think right around that 4,500, just above it to about 4,550-ish, and we might see a pullback in the market. Also on this chart, I want you to notice the RSI on here, and I've got a yellow circle around here. This is where, when the bear market started to the downside, the RSI started really showing weakness by breaking below this level. And notice how throughout 2022, notice how the RSI never got above that level again. This was the closest it came here, then it backed off. And during this consolidation period, the RSI also consolidated. But now look at it, it's above that level of what would be resistance for the RSI. So we also want to see the RSI on any potential pullbacks. We want to see the RSI staying at a strong level, maybe not necessarily above this peak, but we want to see it probably to stay up around the 40-ish level, give or take a couple of points on that. So now let's take a look at the Dow Jones Industrials, but I'm going to be using the YM symbol. That's for the E-mini futures on that. I just like using this chart. Again, here we have the high to low swing, and we can see the Fibonacci ratios the market has come through. It's important to learn and understand how price comes through some of these levels. So as an example, notice how it got right through that 382. There was no resistance there at all. The 0.50 got some resistance, and the test was back down to that previous 382. That's why I call it backwards fib level. And then again, it got through the 50, clustering around the 618 a little bit, and then up into where this peak line, this pink dash line of resistance is. So the Dow had spent a lot of time just back and forth, and the Nasdaq, had been climbing. This area had been resistance, but now the Dow has managed to climb above it. And again, I'm seeing an inverse head and shoulder. This would be the left shoulder, the head of the pattern, and the right shoulder. And so a projected move of that would be bringing us back up around the previous highs, maybe a bit above it. Doesn't mean the market can't go higher, and it doesn't mean that the market will absolutely get there. We just use it as a target to be monitoring. So the next level of resistance, we've got this here and then this level up here. And you can see that coincides with some of these other price clusterings and peaks. But the thing is that the Dow had spent a lot of time below this resistance area, and now it's moved above it. So would not want to see the Dow come back below this low right here. Now the Nasdaq, as I mentioned, has had just a huge run. Look at this run from the lows from December, January. Back in October is where the actual price lows were. A lot of consolidation and then moving up above this trend line here. And see how it's moved up through these Fibonacci ratios. It's just sort of sliced right through them. So the 786 ratio is very close to where this level of support broke and then was tested as resistance. So I'd be expecting to get some play around this price level on the Nasdaq, and we might be able to look for a retracement ratio 0.382 or 0.50. Those are generally the stronger ones to hold when you've seen a stronger move. The RSI has been holding strongly there. Might be getting a bit overdone here on the upside, so some pullback I think would be expected. So be watching the Nasdaq again, get into those Russell 2000 stocks and be taking a look at that, and the other symbols, Intel and Ford. So once again, thanks for watching me. This went on a little bit longer than our usual 10 minutes, but I think that's okay. I hope you found some great information. Feel free to leave me some comments, and I always like to answer questions there if I can. Well, have a great week, everybody. And this is Leslie Jouflas with Trading Live Online.